So today I really wanted to walk you through some updates in the labor market data, particularly as a result of COVID-19, looking at unemployment, looking at wages, and looking at the state of the economy as a whole. So let's start with the unemployment insurance claims dashboard, looking at who is still unemployed, who's collecting unemployment, and compare that to the state from Mecklenburg County to the state, and looking at November, the most current data, back compared to early on in the pandemic. So if you look here in November, you can see across the entire state of North Carolina, there were 47,000 new claims in November, and there were 86,000 continued claims. So just over 130,000 claims statewide. And if you look at that, you can also see just about half of all of those claims are a result of COVID-19. However, you'll notice that that percentage, it's slightly lower on those initial claims than it is on those continued claims. And if we zoom into Mecklenburg County here, and we look at what does that mean for Mecklenburg County, again, that's all relatively tracking. You'll see just about half of all claims, again, are COVID related, with the continued claims having a higher percentage of COVID related claims. And we had about 16,000 people in Mecklenburg County that collected unemployment in the month of November. And so if you look at that as a percentage, what that accounts to is that's roughly 4% of Mecklenburg County is the insured unemployment rate. And that's compared to a roughly 6.5% overall unemployment rate. So that suggests, again, that about 60% of those that are currently unemployed are still collecting unemployment benefits. But what I really wanted to do now is zoom into some of the demographic data and more detail about Mecklenburg County. So here what I've got down at the bottom, it's Mecklenburg County specific data for new initial claims in November. And again, what you'll see is just a slight majority of claims were submitted by female claimants. Continues to be 25 to 34-year-olds are submitting the most claims of any age group. But the other concerning thing here is we still see a large percentage of claims being submitted by Black claimants. So again, strong disproportionality in the claim data. And just to remind you, I'll go ahead and flip back to some early data in Mecklenburg County. So if we go back to March, so now we're looking at March in Mecklenburg County, you'll see only 35% of claims were submitted by Black claimants back in March. And so we've seen that disturbing trend as more people have returned to work really since July. We've seen upwards of 50% of all claims being submitted by Black claimants in Mecklenburg County. So it's really suggesting that there's some strong disproportionality in who is actually returning to work and who's continuing to have to collect unemployment and unable to return to work. And so we've seen that trend pretty consistently. I'll show you month by month. Really since July, it's been over 50% for Black claimants in Mecklenburg County. And if you look at this too, I'll go ahead and look at industry here. I'm going to switch over to continued claims. The data gets a little bit better when you go to continued claims, just in terms of reliability of the industry data. And so if we look at continued claims, you'll see the top industry that's now filing for unemployment, workers are collecting coming from the trade, transportation, and utilities industry. And you'll see as I hover over here some example jobs: auto repair, furniture stores, clothing stores, wholesale, passengers and freight transportation. And this is now the top job, the top industry that's filing for unemployment. If you remember back early on in the pandemic, again, I'll switch back to say April here. That was not the case. I mean, trade, transportation, utilities has been a big industry, but it was leisure and hospitality. It was far and away the top industry that was impacted early on in the pandemic. And so what we're seeing now is we're seeing that begin to shift, that continued impact for trade, transportation, utilities. Again, they've been relatively one of the hardest hit industries throughout the pandemic, but more so now than at previous points in time. And again, professional and business services, you could see that there as well, where they were up in the top few industries previously, but now number two, again representing an outsized proportion of claimants. So we're seeing that begin to shift as the leisure and hospitality industry has been able to recover more quickly than professional business services or the trade, transportation, and utilities industry. And so now what I wanted to do is go into the Charlotte Region COVID-19 dashboard. So again, this is a joint project of the Charlotte Regional Research Collaborative. This isn't just Charlotte Works. We're also working with the City of Charlotte, the Charlotte Regional Visitors Authority, the Federal Reserve Bank of Richmond, and the Charlotte Regional Business Alliance. And you can access this full dashboard either by going to our website, charlotteworks.com/status, and clicking on the link over on the right-hand side, the regional dashboard, or by going to the Charlotte Regional Business Alliance's website. But I'm just going to pull out a few things here. You can see the entire table of contents over here on the right-hand side, but I really just want to focus on the consumer expenditures to start. And so if we look at consumer expenditures for Mecklenburg County, again, tracking over time, you'll see that steep decline early on in the pandemic, but we've seen some fairly steady recovery in consumer expenditures really since about the summer. We've seen that fairly consistent. And so if you compare some of the activity over the past 3 months or the past quarter or so to pre-pandemic, what you can see is we're pretty much recovered, really about 90 to 95% of where we were pre-pandemic in terms of consumer expenditure. We've seen that recovery. So again, something to keep an eye on, but we've seen most of that recovery. What I would like to focus on though is how that varies by industry. And so what I've got here is you're looking at the arts, entertainment, and recreation industry. And you can see this industry, aside from a spike in the middle of summer around when some of those restrictions were initially lifted, pretty consistently depressed. It's roughly 30 to 40% lower than where it was pre-pandemic. And that is in contrast to if we switch over to look at another industry here. Let's look at grocery stores. So you can see there was obviously this outlier of this initial spike as a result when the first restrictions came about of people stocking up. So kind of ignoring this little outlier here, what you're actually seeing is again, you're seeing about a 10 to 15% increase in grocery store expenditures as compared to pre-pandemic. So actually an industry that's benefited fairly well from the pandemic. But let's switch over to transportation. This is another industry. We talked about the unemployment claims coming from this industry. So let's really zoom in at the expenditures in this industry. And you can see pretty well that, again, that initial decline, there was some early recovery right before really the pandemic hit. So there was actually some decline going on really early on in the pandemic, perhaps due to COVID cases in other states and other communities being felt here in the local market. And then that decline has just gotten really pronounced in April, and the recovery has been very slow. While it is on a general upward trend, you can see going from about 70% down in May, now we're looking at about 50% down in January. So that recovery has been there, but it's been much slower in this industry. And so the other thing I'd like to focus on here is let's just look at the job postings here. And so here you can see the job posting trends over time, starting in January, going through December of 2020. Again, you're seeing that mostly recovered, but not completely recovered. And so now what I wanted to focus on was some new data around a projection we had actually made back in the COVID-19 video that was released a couple of weeks ago. And so I'll put a link to that if you want to check that out in its entirety. But for our purposes now, really the point that I wanted to focus on was that projection about the increasing real wages over time as a result of a pandemic that the research had suggested. And again, remembering we did start to see that taking place in the numbers in 2020. But the most recent weekly earnings report that we got showed that comparing the fourth quarter of 2019 to the fourth quarter of 2020, there was a 5% increase in wages during that time period. And if we zoom in to look at some of the demographic data here, you'll see again, it went from 936 to 984 in terms of absolute dollars between 19 2019 and 2020. And again, if you adjust that for inflation in terms of real dollars, that is still representing an increase. But if we zoom in, I want to call out a couple of demographics where there was actually a decrease in real wages. And the first one here is men aged 16 to 24. Again, it's only $1, but you'll see that there is actually a decrease in their real wages between 2019 and 2020. And so comparatively, if you look at women aged 16 to 24, that went up by $9. So again, the gender pay gap for that age demographic is narrowing by 10 there. If you compare men and women over the age of 25, you'll see men went up in terms of real wages by 13, and women went up in terms of real wages by 17. So while that pay gap is still narrowing for older workers, it's at a much narrower rate, $4 versus $10. And then the other demographic that I want to call out in terms of having their real wages remain steady and actually go down slightly is the Hispanic or Latino or Latinx men had their real wages again go down by $1. And so we're seeing again that pay gap is actually shrinking because Latino women had their pay increase by about 17 as well. So the other important things that I would point out here is again, if you just look at the pay disparity between white workers and Black or African American workers, again, that's less than 80 cents on the dollar for the fourth quarter of 2020. So again, some pretty significant pay disparities still there and continuing to persist. And so the last thing I wanted to share with you is the weekly unemployment claims update from the Department of Labor. So again, this is current through the week ending January 16th, as compared to the data I showed you earlier that was only current through November. The difference here is while this data is more current, it can only be drilled down to a state level. I can't get down to that county level with the weekly updates from the Department of Labor. But again, looking at that data, we see that initial claims last week nationally were 900,000, which did represent a slight decrease from the previous week. However, that is still higher than our 4-week moving average. So it's still a bit unclear as to what direction those claims are heading. What's that trend line? Were the last couple weeks a blip and we're moving back down? Or is it still generally increasing? We'll have to wait a little bit to see that. And so now what I really want to zoom in on is a couple of different things in North Carolina. So let's start by looking at regular unemployment claims in North Carolina for this past week. So if we look at just regular unemployment, you'll see that was down about 3,000 3,000 claims, contrasting the past 2 weeks in North Carolina. But now let's move on to the additional types of unemployment that were provided by federal legislation to respond to the pandemic. The first is the PUA. And so again, the PUA is unemployment that's being extended to individuals that aren't eligible through regular unemployment means. And you can see that was down just slightly. So again, think about it as those 1099 workers, those independent contractors, they would generally be under this PUA eligibility. You're seeing that's down as well. But if we look at the last type of unemployment that was added by that legislation, the PEUC, this is that additional 13 weeks. So after you've exhausted your regular unemployment benefits, this is where that PEUC comes into play. And if you look at North Carolina, you will actually see an increase of 14,000 people taking advantage of this legislation. So again, that starts to suggest that maybe the decrease we're seeing in some of the regular unemployment claims, or as people are shifting to this PEUC and relying on this for eligibility. And then the last thing I note here as a result of this report is, again, just the comments from the state. So if we look at North Carolina, again, we overall had an increase. And the comment is, again, layoffs in the manufacturing and construction industries. So again, we're starting to see that track with what we're seeing in the industry data earlier on, but it's something to keep an eye on. And so that's all I have for you today, but I appreciate you taking the time to go through this with me.